Hey there, Mike Banner for our latest edition of 62 Who Knew. And today is a great day, like all the days of 62 Who Knew, because I'm bringing on a guest who I've known for more than a decade, and our topic is reverse mortgages, which is so close to my heart, and a product that is still so misunderstood by the public, by the financial planning community. I'll ask our guest this in a second, but I want to read his introduction. I don't think there's ever been a product that has been surrounded by more half-truths and misinformation than the reverse mortgage. And we're going to clear a lot of that up with today's great guest. I want to remind everybody, as always, to go to the www.62whoknew website to learn more about reverse mortgages, long-term care insurance, annuities, life insurance, Medicare, Medicaid. Our new website is just helping hundreds and hundreds of people per week. And don't forget, I have to say this in my podcast voice, please don't forget to like, share, and subscribe. Did I do that good, Anthony?
I love it.
Thank you very much. All right, without further ado, I'd love to introduce you to Mr. Harlan Accola. I'm going to read his bio, but then I want to tell you something else about him. Harlan Accola is the National Reverse Mortgage Director for Movement Mortgage and has taught financial professionals and clients how to integrate home equity into retirement in a stewardship-friendly way for over 2 decades. His mission-driven approach helps families maximize their resources they've been given while pursuing a greater financial freedom and generosity. That's this man. Harlan has collaborated with leaders and experts like Dr. Wade Pfau, Jamie Hopkins, Ed Slott, Tom Hegner, who's on our show all the time, and David McKnight. Harlan and his wife Brenda, for over 40 years, use a reverse mortgage themselves. He practices what he preaches to bless their family and support their charitable passions, modeling how to redeem money and strengthening lasting legacies. Welcome to the show, Harlan. It's just such a pleasure to have you.
It's good to be here, Michael. I always have fun talking to you.
But now I want to read something that I pulled off one of your comments on LinkedIn. I love LinkedIn, okay? LinkedIn should send us a check, Anthony, don't you think, for me pitching them right now? Yes, there we go. This is a quote that you had just recently said. The purpose of my career in the reverse mortgage industry is to enrich people's lives by changing the paradigm of traditional financial ideas and methods to a better understanding of how money really works and how it can affect our lives for the better if we control that money as compared to following conventional wisdom and outdated methods. And I've always said a man with goals, professional goals, financial goals, that's a great man. But a man that has a passion to better other people's lives, that's a greater man. That's a different type of man. So again, thank you for being here. Thank you for all you've done for the industry in the last 20 years. Thank you for the thousands, and it is thousands, I'm sure, and thousands of lives that you've touched and made their lives better and made their family lives better. So again, welcome to 62 Who Knew. I hope for the first of many visits.
Well, it's good to be here. You know, I can't take credit for the basics of that understanding. When I was 20 years old and broke, I went to a Zig Ziglar seminar. And I went up to him afterwards when he was was autographing my book that I bought that I could barely afford. And I said, Zig, you know, I understand all this, you know, cool stuff and everything, but I'm broke. How do I make money? You know, what's your advice? And he said, Harlan, I'm telling you, when I stopped worrying about making money and making commissions, and I started looking at trying to help people, I just went from being broke to having dollar bills come and play in my backyard. So, I just, you know, I've learned that ever since, that if you just spend enough time helping other people with their problems, it's going to fix all of yours at the same time. So I learned that fortunately very early from a guy like Zig.
I didn't learn that till late in my 40s. Glad you learned it in your 20s, because whether you call it fate or karma or whatever you want to call it, it cannot be denied. When you help people, it comes back to you 10 times over. So let's get down to brass tacks about our beloved reverse mortgage, because I have had a few shows on reverse mortgages, And a couple of my reverse mortgages, more than a couple, brothers and sisters that I've known for 20 years, have either called me or emailed me or texted me and said, you were a little rough on us, weren't you? And yeah, I'm dealing with reality because our beloved reverse mortgage has been faltering, if not failing, since 2009, which is 17 years ago. If you look at a graph of reverse mortgage volume, other than the year when the whole world refinanced their traditional loan and their reverse mortgage loan because of COVID rates being in the 2s and 3s, we were able to go back to all our reverse mortgage people with a lower rate, give them more money. We had a great year. But if you take away that year, which is really the last 6 months of 2020 and the first 6 months of 2021, the graph of reverse mortgages has been a 45 to 60 degree angle of straight down since 2009. And that's not good. And I don't blame the reverse mortgage. I blame the reverse mortgage industry, which is probably why the industry gets upset with me sometimes. We're not delivering the right message. We never have. In 2009, and I'm going to stop talking soon, I promise, because I want your input on this. In 2009, when we did more than 100,000 reverse mortgages, which was our record, we had 3% penetration. We were having meetings, you, I, MetLife, Wells Fargo, Bank of America, in NERMLA, the National Reverse Mortgage Lending Association. Leave they. Why is it only 3%? Why can't we get our message to the public? And here we are 17 years later, and it's less than 3%. What the hell are we doing wrong, Harlan?
Well, I think you got to look at the overall big issue, and that is that the industry, you're right that the industry has been a problem. The main agency has been NERMLA, National Reverse Mortgage Lenders Association, which did a miserable job because they tried to sell it like everybody else as a product, as something that should be used as a last resort, something to help the poor people and the people in trouble. I'm all for helping poor people. I've done loans for 90-year-old widows, and so I want to help them. But the whole thing comes down to financial planning, and it needs to be part of a plan. Any professional, whether they're selling life insurance, whether they're selling investments, annuities, whatever, if they are trying to sell a product, they are generally not going to do very well. If they're looking at the whole picture, like I won't suggest a reverse mortgage to someone until I know what's going on with their income, their health, their investments, how much money do they have in what we refer to as bucket 2. In my book, I put together bucket 1, 2, and 3. And bucket 1 being the income, bucket 2 being the investment bucket, and bucket 3 being the home equity. If you look at it as a holistic plan, everything changes. And the industry has not been doing that. The loan officers inside of the industry have not been doing that because they're lazy, because that's what human beings are. I've been lazy from time to time. And when you don't do things in a holistic way and you try to sell a product, you might make a living and you might pay your bills, but you're not going to change things. But at the same token, I think we need to look at the overall scenario. You're looking at a space of 10, 15 years. If we look at the big picture, I read a book called The Tipping Point by Malcolm Gladwell a number of years ago. Another book just recently by Mark Batterson, which is Gradually, Then Suddenly. This has been building. And if you take a look at the chapter in my book about horseless carriages and electricity, it took a long time for horseless carriages to be accepted. It wasn't until the Model T that things really kicked off. But up until that point, people really thought horses were more reliable because they were. I mean, horses did better than cars that broke down all the time. So it took a fair amount of time for something new to be accepted. There's 72 million people that are over the age of 62. And yes, we have a dismal acceptance rate, but what I'm seeing is the tipping point of a bunch of things building up to that. I've talked to industry leaders in the insurance industry, in the financial planning industry, in the AUM industry, assets under management, and I see a shift that has not been there since I've known about the product in the early 2000s. So if we look at the big picture, it's going to be gradually, then suddenly. Things aren't going to go up gradually like they did in the beginning. They're going to go up exponentially like a hockey stick. So I still have confidence that even though there's been a lot of slow process, that we're going to educate loan officers to be doing something very differently than what they've been doing, that they're looking at it as part of financial planning. And if they don't do it in our industry, there's going to be a way that financial planners can do it in their industry, and we will be replaced by financial planners. That's going to be essentially the difference.
I agree with every word you just said. And I think you've not come up, because you and I have discussed this over the years. We've spoke at the same, events and had a chance to spend time and break bread with each other. I don't think loan officers, and I'm a loan officer, and that's how I put my kids through college, and that's how I took them on cruises and bought them cars, and it's been a great life for me. Loan officers aren't capable of doing this. I'm sorry. You are. I am. And not because we're special, but because we're kind of dinosaurs and we adapt to what we need to do. But if the financial planning world doesn't get directly involved with the reverse mortgage world, and it doesn't have to be a reverse mortgage, I hate to say this, the use of home equity during retirement. One of our national sponsors, Cornerstone Financial, I know you're probably familiar with them, Chiefs. Chief stands for Home Equity Insurance and Investment Funding Solutions. You can sell a fractional portion of your home. Is that unbelievable? You can have a $2 million house, sell 10% of that house for $200,000, no debt, okay? And now you have $200,000 to invest into a single premium annuity or life insurance or long-term care or hybrid product. There is your regular line of credit, your HELOC that most people, in their 60s and 70s, I don't want them to have a payment. You and I think alike. We're not the only option, but we're certainly one of the best, if not the best. But I don't know if the mortgage world, and I know my mortgage brothers and sisters are going to get so mad at me for saying this, are ever going to evolve past, this is your rate, this is your payment. I only charge a half a point. I just don't see a loan officer evolving into a financial planner. And this is a financial planning product. It's not a mortgage product, although it is a mortgage.
Yeah, I don't disagree with you that in mass they're not going to. But, you're familiar, everybody's familiar with the 80-20 rules. There's 80% of the people that don't do very well and do exactly what you described. They're just order takers. But there's 20% that are. And the people that I work with, I will not employ what we refer to as retirement mortgage professionals unless they are financial planners. But in fact, we don't even call them loan officers; we call them retirement mortgage professionals. So, the issue is that while you're not going to convert most people into that any more than you are going to in the forward world, in the forward mortgage world, they should be converted to that. The forward mortgage people should be financial planners, but they're not either. They're into taking orders, and they all flipped out when rates went up because they couldn't, sell rate anymore. And so I don't want to come across haughty, but I mean, I'm just a farm kid from Wisconsin that did very good in learning one product and one segment of understanding retirement, but I'm not alone. There's a whole bunch of people that are going to be able to do what I've done and accomplish that at the same time. So that will continue to happen, and it's going to be there's going to be a shift, not of a lot of people, but a few. And you don't need a lot; you just need a few.
But do you need a lot to bring this product to the masses? I mean, because I'm going to respectfully disagree with you and say, because I live by the 80-20 rule. Oh, my God. It doesn't make a difference what in life you're talking about. It's the 80-20 rule. But in the reverse mortgage world, I'm just going to say it, I think it's the 95-5 rule. I really do. And I think you may have the great majority of that 5 working for you at Movement Mortgage, because you've attracted an incredible team. I mean, just an absolutely incredible team. But if we're going to bring this to the masses, you got to have massive boots on the ground, and we don't.
Well, maybe the average loan officer in the reverse space does less than 10 a year. Um, we have people doing over 100. So that means that you don't need as many people. You just need better people. And so when you scale something like that, if you want to, for example, have a company that does 10,000 a year, you don't need 10,000 loan officers. Uh,
No,
uh, uh, so,
but you need a hundred good ones,
yeah. And
and I'm not
I
sure there
believe
is 100 good ones.
I have way more faith than you do.
Yeah, I know.
There's if I've got the leads, if I've got the demand from a insurance company, from a financial planning company, I can find 100 people, whether they're inside or outside the organization. I would not hire what I
Yeah,
call a retread. I'm not going
yeah,
to hire somebody that's happy helping one family a month. I'm not going to hire somebody like that because they're not
yeah.
serious about the business. They're just taking what drops into their lap. Nothing against them. That's fine if they want to do that, but I'm not going to hire them as a financial planner inside our company or as part of my team because they're not going to do a great job. They're going to take too much time off and they're going to treat it as a retirement job. One of the problems in this industry is people are paid too much. They make too much money on one loan. And so they go to one loan and then, and they think somehow that they're entitled to that money and that, okay, I'm done for them. I just closed one loan, so I'm done for a month or two. Shame on them. Go out there and try to see how many people you can help. And that is really, I'm not saying that we should make less on this product because we need that for promotion and so on and so forth. But a lot of loan officers want to make all of that money themselves. And so the issue is that there has to be a concerted effort to the people that are doing it simply need to be way better at what they do. And they need to look at
Yes.
themselves as financial advisors, not as an order taker.
Whether you're purchasing a new home or refinancing the one you love, one thing has never changed. Mortgages remain the most inexpensive cost of funds available. And in today's market, choosing the right mortgage professional can save you thousands and help secure your financial future. That's why the 62 Who Knew podcast partners with American Pacific Mortgage, one of the nation's most respected lenders, helping homeowners make smart decisions at every stage of life. Visit 62whoknew.com to learn how the right mortgage strategy can power your retirement plan. For millions of Americans, the greatest asset they own is their home. Yet most of that equity sits locked away, unused. What if there was a way to unlock your home's value without debt, without interest, and without monthly payments? Introducing Chiefs, converting home equity into financial success. A revolutionary strategy that lets you turn a small piece of your home's equity into cash you can use today to protect your retirement tomorrow. Visit 62whoknew.com to learn how Chiefs can fund long-term care, annuities, life insurance, or lifestyle goals. Yeah, I think we have to breed, for lack of better terms, a whole new generation, a whole new style of financial planning loan officers. I don't, you have a lot more faith than me in the existing structure, but I think our industry is suffering what a lot of other industries are suffering: financial planning, realtors, insurance. There's no one in college right now, no one going, oh my God, I can't wait to graduate and be a reverse mortgage loan officer. It's just not there. It has to be part of, I can't wait to graduate and be a financial planner and help people have a much better life, of which reverse mortgages is part of.
Yeah, well, I think we agree with that. I don't disagree that I would not hire a majority of the people who call themselves reverse mortgage loan officers because they're reverse
That's right.
mortgage order takers and they do less than 10 a year. Nothing against them. I don't have anything against them, but they're not going to help the industry accomplish more. They're just going to help a few people, and that's great that they're helping a few. But I was just at a financial planning conference last week, Kingdom Advisors in Orlando, 3,000 advisors there, and they brought in a bunch of colleges, kids that are graduating in the next year or two. Those kids flocked to our booth asking questions about how they could be involved with the home equity transformation. After they heard our speech. So, it may not be Joe Schmo who's 68 years old and doesn't even have a reverse mortgage himself and doesn't understand the value of them, but it may be a 30-year-old kid who is going to be a financial advisor, and now he likes the mortgage industry and wants and believes in what our mission is.
Yeah, and there's so many great financial planners that are preaching this. That the old rule of the three-legged stool, which would include your savings, which would include Social Security and any pensions that you might have. There's your three-legged stool of retirement. There's no doubt the fourth leg has to be the use of home equity, because there's no doubt of it, because that's why I created 62 Who Knew. Not for reverse mortgages, although it's a part of it. 62 Who Knew has exploded into one of the largest retirement platforms in the country, because our entire premise is longer lifespans is changing everything. It's changing the way we retire, when we retire, how much money we need to retire. It's changing the way our families look at taking care of mom and dad. 30 years ago, if you wanted to take care of mom and dad, you were probably talking a few years. Now, if mom and dad retire in their mid to upper 60s, maybe with a little health issues, with breakthrough in modern science and technologies, you could be taking care of mom and dad for 25, 30, or 35 years, and then your children are taking care of you before your mom and dad are even gone. Longer lifespans has changed everything, and I think it demands that home equity be part of the overall plan. But our industry, and I know when I don't want to be bashing the industry, but I am. The industry is still giving the same tired message, to the public, to the financial planning community, other than people like yourself, that, God, I hate these three words. I hate it. And reverse mortgages, people have coined this. Low-hanging fruit. Yeah, I do one every month, maybe a little less. I get that call because grandma and grandpa are broke and they can't go to Walgreens or CVS. And in my heart, I'm so happy to help them. That's the low-hanging fruit. And do I love helping those people? I go to my closings because I'm a dinosaur, so I still go to my closings. I hug them. I know I'm changing their life, but that's not the future of this product. Again, but that's the message. Our industry. We have some great groups on LinkedIn that I don't participate in that much because it's too stressful. And when I do, I don't make a good comment. I mean, I see things all the time. Financial planners feel home equity could enhance the quality of life of a senior. Really? Wow. That's what, you and I have been saying for 25 years. That's the headline of an article. And I said this to you during our preamble. What's tomorrow's headline? Water. It's awfully wet. I mean, talk about stating the obvious. If you're a diabetic, stay out of the bakery. Really? Thank you, Captain Obvious. When are we going to become a little deeper as an industry?
Well, before your heart rate gets up too high, settle down a bit, because, it's not just our industry. We're not just talking about the reverse mortgage industry or the mortgage industry in general. We are talking about the retirement industry. Shame on all of those financial advisors that have not read Wade Pfau's book or checked into the facts about home equity should be used in most cases, not a few. Where are they at? We can bash our industry of loan officers all we want. The vast majority of financial advisors don't have a clue about including home equity. Where is their education? Why aren't they pushing it? Because their clients are going to be in a worse position because they did not talk about it. And they say, I can't talk about home equity. Well, all the compliance officers and all of this sort of thing. This is a retirement issue. So we need to be able to educate the top people in financial planning, because they are actually a bigger problem. Yes, we caused a lot of the problem because we went into financial advisors like I did 20 years ago and said, hey, if you got any clients that are broke, I can help them. Well, that's not where you go into financial advisor's office looking for people that are broke, because most of those people have money.
Yeah.
Until they're running out. So we didn't do a good job of educating them in the beginning, and because we said this is for the people that are running out of money. But this whole problem is we have to reach out and educate beyond our industry to the annuity people, to the life insurance people, because they will say three things. They'll say you only need it if you're broke, it's too expensive, and you're going to lose your house. And that is the standard thing that every financial planner who isn't educated is going to say. And they're ignorant and they don't know what they're talking about because it's not expensive. It's one of the cheapest products out there. That's why I have it. And I make more money because I spent that money on my closing costs. I would have paid double the closing costs. And I know that you don't really agree with that. But if it's used correctly, this is something that is a cheap product. But we'll come back to that in a minute. But the issue is if the financial advisors understand that this isn't for people that are broke. Yes, we'll help the people that are broke, but that's not the primary purpose. Secondly, that it is not expensive any more than cash value life insurance, any more than annuities, any more than 1% a year for AUM. Mm-hmm. I mean, those things are expensive too. But what's the alternative? Managing yourself and making mistakes, or not getting the right annuity, or whatever, or the right life insurance policy. So the problem, Michael, is you're right in bashing our industry, and I'm irritated as more than you about the absolute untrained, unprofessional people that are representing our product because they happen to have a mortgage license. And I hate that kind of stuff because they screw stuff up and they make us all look bad because they are not taking it serious as a business. But it's a bigger issue. It's how does this fit in with everybody's retirement plan? And the annuity people and some financial planners will say, I believe in reverse mortgages. Okay, so how many of your clients have a reverse mortgage? Maybe one. Okay, we don't believe in them. You should be talking about it with every single person that comes through the door. And so, if you want to start beating people up, you got to go into the financial planning process and beat them up too. I'm just saying, if you're going to get your boxing gloves out, don't just punch the reverse mortgage people.
No, I'll punch a few more people. And two things that you said that are so industry changing and so correct. Number one, this is not an expensive product when used correctly. If people knew the front loads of their annuities and insurance fee, God love insurance people. We need insurance. It helps us when we die, helps our family, it helps us when we're sick. But the reasons the commissions on insurance are so high is because of the front load of the product. This is no worse than that when used correctly. That's the quote, when used correctly. It is not. But the other thing that you said that I've been trying to preach, and I'll just admit it, I gave up. You didn't give up. I started a podcast. You kept going on the righteous path. I started a podcast, is the financial planning community. I wrote some articles that went national years ago that caused me some unbelievable grief on LinkedIn because I think financial planners are going against their fiduciary responsibility by not including home equity in their retirement plan. Forget the fact that Harlan and Michael love reverse mortgages. Oh, isn't that nice? We're such nice people. You should talk about what we do for a living. It's your responsibility. You have a fiduciary to discuss their future, to maintain their quality of life, to increase their net worth, not watch it go down. And when used correctly, a reverse mortgage can do that. So I wrote an article like that, and it was picked up by a few big people, but the hate emails that I got, Harlan, from the financial planning world, was amazing. Our compliance people are this, we can't this. That's nothing but a bunch of crap. Now, they're telling the truth. Compliance people stop a lot of great things from happening. But you are right. The financial planning community deserves to be admonished as much as our own community.
Mm-hmm. Yeah, because it's, there's $14 trillion in home equity. There's $35 trillion in home equity for all ages, $14 trillion just for people over the age of 62. And so why is it an unmanaged asset? I mean, everybody's in the financial planning world is going after a 401k rollover, sell an annuity, whatever, which is all great stuff. But what are they doing with the other half of the equity, which is in the house? What are they doing to manage that? Because that's an asset. And it's the largest unmanaged asset in the history of any country in the world. Sooner or later, that's where I'm telling you about the gradually then suddenly. There are things happening right now that's going to change that, and it's not going to change it a little bit at a time. It's going to be a dramatic shift. And when the financial
Yes.
planning community really understands that, we'll forget all about those years of decline, and all of a sudden it's going to be crazy, and it's going to be a normal thing that's just what you do. You do a reverse mortgage as soon as you turn 62. If you're older than 62, you're going to do it anyway, and that's just one of the things that you're going to do to fit in as part of the plan. And is that a year away? It may be. Is it more likely maybe 3 to 5 years away? Maybe, but it's not more than 5 to 10 years away. And because there's a mass that has to deal with that 14 trillion.
That's right. They have no choice.
Right. And everybody says, follow the money. Well, let's not, when these stats go out, there are big companies outside of the mortgage industry that are looking at this $14 trillion and knowing that's part of the solution.
And to be fair, before we go on to the purchase reverse mortgage, the HECM for purchase, which I should be literally changing the entire senior real estate world and has not. And again, I blame the industry for that. But before we get to that brass tacks, because of higher interest rates, we're lending people a lot less than we ever have. I mean, basically, if you're in your mid to upper 60s, even low 70s, after costs, we're basically lending people a third of what the house is worth. And I've had many financial planners come back to me and go, Michael, we want to do it, but it's so hard to tie up $1 million asset for $300,000. And then because my people planned well and they don't have a mortgage, you're telling me I can't have the $300,000 to do something wise with? I can have 60% this year and 40% next year. I think the future of our world, and I know a lot of people agree with this, I want to get your opinion, is proprietary products. Because if the government doesn't rejuvenate the HECM into the needs of today's greater generations, senior generations, the guidelines of today's HECM does not invite the financial planning community. The proprietary products do, which is why we're seeing their volume increase so much. But lending people 30 to 33% of what their house is worth when they're wealthy and they can walk into their bank and get an 80% credit line. And yes, that comes with a payment, but if they have a good credit score, we're not credit score driven. That's a double-edged sword. But with a good credit score, I have friends going in with their $1 million house, borrowing $750,000, at prime minus a half. Well, why don't you do a reverse mortgage? Well, the bank is giving me $750, Mike. What are you giving me? $300. So we need changes to the HECM. I don't think NRMLA is powerful enough to make those changes happen. So we need more proprietary products. I want to get your opinion about that, where people can say, yes, I want to take out $300,000 and fund a single premium life insurance policy that's going to be worth $2 million when I'm in my 80s, or a long-term care policy. What's your thoughts on that?
Are you done whining?
Yes. No, maybe I'm not. But for you, I am.
Okay. Well, I don't disagree that there should be some changes in the program, and I think that it's too conservative right now because of the way that things were set up with the guidelines and the actuarials. So do I think that it should be closer to 40% instead of 30%? Yes. However, hoping for something different, I wish that this car would be faster. I wish that this car would be cheaper. I wish that this car would be red instead of blue. Doesn't really make sense, and we shouldn't really be thinking in those terms, because the issue is what do we have to sell right now? Because if this is what we've got to sell, it's either good or it's bad. And the number of financial planners that whine about the 30%, okay, great. Tell your client to go out and get an 80% loan to value with a payment that is not guaranteed, that is going to double the payment in 10 years or sometimes 5 years, and can be taken away as soon as there's a downturn in the market and froze or asked to be repaid. That is a whole different deal. So if I can get 30%, and let's not forget that 50% of people, roughly 35 million people, have a zero balance on their $1 million house or $500,000 house because it's paid off. So if you can at least get at 30% of it, that's better than zero. And half the people in the United States are still at zero after they're age 62. And then you talk about the other ones, and those other people are sitting on a situation where they're still making a mortgage payment, and their mortgage is only $150,000, and they've got a $500,000 house. Shame on the financial advisor for complaining about the loan to value. They should be immediately refinancing and taking it to zero. So is it a good idea to look at the proprietary products? Yes, but the proprietary products, because they're not insured, have a much higher interest rate, so you lose equity at a faster clip. Yeah, your initial closing costs are higher. We definitely use them, and there is no question that I'm glad they are there. I am glad that the proprietary products are there and that they're growing and then there's more options available, and I think that's going to continue. Do I still think there should be changes in the government program? Yes, but in the forward world, there's a VA, there's FHA, there's rental loans, there's non-QM, there's all kinds of different scenarios. We just don't have as many options, but we sell what we have. And if what we have is good enough, it's not perfect, but if it's good enough, that is enough. It was enough for me to eliminate my mortgage payment of $3,500 a month.
Right.
And eliminating that $3,500 a month, that was awesome because I eliminated that $3,500 a month, sent it to my advisor, and my net worth in 4 years went up by $200,000 after I subtract the closing cost and after I subtract the accrued interest. That's a great deal, and that's under very restrictive guidelines on the mortgage side.
I absolutely agree with everything you said, other than you calling me a whiner. Other than that, I absolutely agree with that.
You told me I could say whatever I wanted.
I did, because I knew you would anyway. It's not like I gave you permission. It's not like you're known, for your subtlety.
Are you turning 65? Well, if so, the most important decision in your life right now is to determine which Medicare plan you need to be on for your unique changes in life. Are you still working? You on your employer's plan? How about being a snowbird? If so, you need to speak to a Medicare consultant who can help you with your needs. I'm Diane Daniels, and I'm the CEO of Medicare Nation. Go to www.62whoknew.com and click on the Medicare Nation tab. I will give you a free consultation to make sure we find the right plan for your unique needs.
As we live longer than any generation before us, one question becomes more important than ever. Will your income last as long as you do? On the 62 Who Knew podcast, we dive deep into the strategies that protect your future. And at the center of every strong retirement plan is guaranteed income. Annuities create income you cannot outlive. They provide stability, protection, and peace of mind, no matter what the market does. Visit 62whoknew.com and start planning the rest of your life today. All right, let's talk about, in our last few minutes, because, again, a few people give me the credit of coining this phrase. I don't think I coined it, but I sure as hell use it a lot. To me, the purchase reverse mortgage, the HECM for purchase, was and still is the sleeping giant of the senior real estate world. And I'm back to beating up the industry because our industry, other than a great team that you've put through, we have some great people at Mutual of Omaha. We have some great people throughout the industry, but a small group that know how to talk to realtors, that know how to talk to the type A personality that's going, when are we closing? When are we closing? When are we closing? But I have taken a different tack with the purchase reverse mortgage over the last few years, and I'm not doing a ton of them. I won't give you a line of crap, but I'm doing more than most. And I have changed, and I probably I think, maybe I'm wrong, I probably have educated more realtors in this country. I'm up to about 20,000 that have gone through my school. Obviously, with COVID, I wasn't doing much, but I have the records of about 20,000 realtors in the last 12 years that I've taught about the HECM for purchase. And it wasn't until 4 or 5 years ago that I realized I was doing it wrong. I was talking to them about the heart and the soul and how it changes people's lives not to have a mortgage payment. And of course, I taught them that you don't lose your house and it's not high closing costs and your children are not screwed out of their inheritance. That's all crap. I taught them that first, but I went for the heart and soul. And it wasn't until somebody smarter than me said, wait a minute, do the math. You're telling me if somebody has $500,000 to pay cash, and they're moving to the west coast of Florida, where I live, but they could be anywhere in a beautiful area. But let's use the Tampa Bay area, where inflation has been so incredible the last 20 years that where 10, 15 years ago, 500,000 got you what I would refer to as a McMansion. Now it just doesn't. Now when somebody says to a realtor, I want a 4-bedroom, 3-bath because the grandkids are going to visit me. I'd like a pool with a spillover hot tub, and I really want an island in the kitchen. And we just sold my house in Pittsburgh, and I have $500,000. Well, in most cases, realtors in this area of Florida, or a lot of area of Florida, and New York and New Jersey and Arizona are going, yeah, we could have done that 15 years ago, but $500,000 isn't enough. Are you telling me you can take a person with $500,000 cash and sell them a $700,000 house? That's the math. There's our 33%. And they'll still have no principal and interest payment for as long as they live? And they're in their dream retirement home, the one they really wanted? Are you telling me you can take a $700,000 cash buyer and turn that into $1 million sale and give them the house of their dreams, and they have no principal? Yes. It wasn't until I started ending my classes with, do you understand what I'm saying? Not only will you get more referrals because you're selling them their dream retirement home, you're increasing your commission by 40%. I had to touch their greed button. It took 15 years to learn that. And that's when my classes started producing reverse mortgages. So sad as it may be, I am helping a lot of people after my classes not settle for a less expensive home, but to literally get their dream home. But I had to deliver that message to the realtor that you benefit by doing this. That's our world today. That's, well, you know, again, I blame the industry for not getting this message to 2 million realtors, of which only 20% actually sell a home.
Yeah, well, you know, I don't disagree with what you're saying, but you're assuming that all realtors are greedy and will not make decisions based on the heart and caring about their clients. Yeah, and quite frankly, that's the case among financial advisors and loan officers.
And shoe salesmen and bakers. And if my father was alive, he'd say, and firemen and candlestick makers. That's the world. That's why I don't think I'm insulting anybody. That's right. Our world.
Yes. But it's also the fault, if you're going to get your boxing gloves out, you better do some working out, Michael, because you got to punch out all the loan officers, and then you got to punch out the financial advisors, and now you got to punch out the real estate community. Because why on earth aren't they talking about it? They've done a better job of creating wealth than most financial advisors. There's $14 trillion. That's more money than is in IRAs. So the real estate industry, despite all of the complaints that people make about realtors and mortgage people, we have together created $14 trillion worth of wealth for people over 62 and $35 trillion nationally. That's a lot of money in one asset class. So you need to get on the case of the realtors, all of the realtors and the National Association of Realtors, because why aren't they doing better education? Because most people over age 62 are in the wrong house, and most people should move. They should move to a smaller house. They should move to a house on one level. They should move to a house closer to their grandkids. They should move, and they're not doing it because their house is A, paid off, or B, the house is got a 3% mortgage on, and they don't want to move because they'll never get a mortgage that cheap again. So when those two things are explained to realtors, along with the fact that you can go from a $400,000 house to a $700,000 house, I went from a $100,000 house to $1 million house in Minneapolis, closer to my kids, which is wonderful to be close to the grandkids and everything. So I fully understand how important that is, and more people need to get that as they're moving south or moving to a house in the mountains, house in the on the beach, on the golf course, whatever it is they want, but most likely closer to family. The overwhelming issue on reverse for purchase is realtors have a negative attitude and I think you know this, but I just want to make sure that it's clear in this podcast. The reason most realtors are negative about this is because they sold a house where all of the heirs were really ticked off that they didn't get what they thought because mom and dad had that. And so they first need to understand that before, because even if you incentivize them with money, if they had a bad experience because the heirs did not like a reverse mortgage, first they need to understand that mom and dad were taken care of. The heirs didn't get as much. Mom and dad should have talked to them about it, but without question, that needs to be tackled first so that they understand that they're not bad. The reason that the kids didn't get as much is because mom and dad used the money and they just were afraid to tell about it. So overwhelmingly, you are right. Any group that I've worked with, we generally led the nation with percentage of our loans, 15 to 20%, being purchase mortgages.
That is incredible.
And that's very important. So I'm glad that you're highlighting it, because most people should move in their 60s, not in their 80s.
That's right.
And the problem is people wait until somebody dies, somebody gets sick, somebody falls and breaks a hip, and then, oh yeah, we're going to have to move. And that is a horrible time to move. And so we must educate the real estate community, not just our borrowers. We got to educate the real estate community to understand. When my sister bought a house with a reverse mortgage, the realtor called me up and said, hey, I need a approval letter. And I said, okay, I'll send that right out. She said, what kind of mortgage is this that your sister is getting? And I said, it's a HECM home equity conversion mortgage, reverse for purchase. And she said, oh my God. Does your sister have bad credit? I can take her to the credit union. Maybe she can get a loan there. That was the immediate thing out of and I said, no, she's got a 780 credit score. That's not really the problem. She's doing it because it's the smartest thing to do, and because my sister has plenty of money and doesn't need to, but she's doing it because it's a very smart thing, and she's going to get a tremendous tax benefit because she's buying a house with a reverse for purchase. People with money should do it. Most of your clients should buy a house with a reverse mortgage, even if they have plenty of money, because they got plenty of money. They have to pay a lot in taxes, and most people don't realize that buying a reverse for purchase, buying a house with a reverse, is one of the most powerful tax savings scenario. I just had a client that can pull out $1 million out of their IRA completely tax-free because they are financing a house with a reverse mortgage between now and the next 15 years. So without question, we've got to get this information out to real estate agents and to financial advisors, because financial advisors should be talking about it, because the majority of people are in the wrong house. And so I tell realtors when I do a seminar, the blood is on your hands, real estate agents. If you guys don't get a listing and get people like me out of that house that they don't belong in, people are going to die of falls, tripping on stairs, everything else. Right. So you better get people out because they're in the wrong house financially and emotionally and physically.
Well, I'm glad we 100% agree on the purchase product. This is good. So he's not going to call me names, Anthony. That's good during the purchase product segment of the podcast. No, it just drives me crazy when I've had the same thing with a pre-approval. Oh my God! I go, what do you mean? Oh my God! My pre-approval letter is what? What would you rather have a pre-approval letter from somebody that's putting 3.5% down, and if they buy furniture at Rooms to Go next month, they won't be able to close because their ratios are off? This is the strongest pre-approval letter in the mortgage industry. But again, got to teach the realtors. And, I don't usually use statistics because most statistics are made up. That's just a fact.
By the way, Abraham Lincoln said that 80% of the statistics on the internet are incorrect.
I love that. And people will believe that because, everything on the internet is true. We have a whole generation of people, that think that. But according to NAR's statistics, and I do trust this statistic, two statistics, 74% of the 2 million realtors in 2025 didn't even sell one house. 44% sold one. So this isn't 80-20 anymore. When you do the math, it's more like 90-10. And getting to that 10. But I think it's also important to understand for the young realtors that aren't selling anything or selling one house a year, by wrapping not just their head and their mind, but their heart around the purchase reverse mortgage, they can build a career on that. while helping people, as you put it, quite frankly, while helping people to build a lasting, legacy. There are young realtors and young mortgage people that need to understand, wrap your brain and your heart around a reverse mortgage, traditional and purchase, and you can build an incredibly lucrative career and help people on a moral and ethical platform. And we got to deliver that message too. So anything else that do you want to end with?
Any of your listeners that would like to engage with me on the book, I'm writing a new book. The old one came out in 2018. If they want to read the book and give me some ideas, I'll send it to them as an unpaid editor. So just have them contact you, and I'll get some books over to you, and you can send them out. Or they can contact me directly. I answer my cell phone. I got voicemail. I respond to my voicemail. I'm at 715-207-9991. Harlan, Harlan, Accola, Accola, at movement.com. It's harlan.accola at movement.com. Be happy to engage, and especially if you disagree with me. Hey, I learned most of my stuff from things that people disagree with me.
Well, I've had a few people say to me this past 2 weeks when I said, "Oh, Harlan's coming on because you're so well known and we have similar friends and in the industry," and several people went to me, "Wait a minute, you make a living doing reverse mortgages?" I said, "Yes, I do." And you're letting somebody that's as well known, maybe even more well known nationally than you, and you're letting him come on the show and do his shtick. I said, "Yeah," and they said, "Why?" And I said, "Well, here's the truth. I was brought up by an incredibly great father. My book, A Gift from My Father, is not about reverse mortgages. It's about the greatest generation and how
it's an awesome book, by the way. You gave it to me. It's an awesome book.
Thank you very much." I said, "But he taught me a rising tide lifts all boats. And if Harlan can come on the show, and I think we're going to have record-breaking viewership for this show, and say to 5,000 or 10,000 people, impart his knowledge, and people contact him for a reverse mortgage, or they go to 62whoknew.com and click on my mortgage thing and I'll do a reverse mortgage. It doesn't make a difference. A rising tide lifts all boats. I think that's another problem. God, I keep beating up our industry, but I don't care. It's another problem in the industry, not sharing. A rising tide lifts all boats. Mm-hmm. If Mutual of Omaha was doing 5 times more mortgages, so would Longbridge. So would Movement Mortgage. So would my company, American Pacific. This is true in all of life. A rising tide lifts all boats. Everybody thought when Wells Fargo and Bank of America left the industry years ago, they were doing 5,000 and 10,000 reverse mortgages a year. Oh my God, Harlan and I will get to share in that because those people need it. Those numbers disappeared because they brought credibility. They had 5,000 branches talking about it. Our business didn't go up when they left, when the Giants left. It went down. That proves it. But yes, to all our viewers, please contact Harlan, read his book, look him up on LinkedIn, Google him. Quite impressive. Do what you want to do. Or go to www.62whoknew and click on my mortgage link. It doesn't make a difference. 62 Who Knew wants to help you. So does Harlan. So does Movement Mortgage. So does American Pacific Mortgage. Thank you so much, my friend, for being here. I'm going to have some panel shows in the next 90 days where we're going to bring on Chiefs, which is Cornerstone Financial's use of home equity, which is the sale of a fractional portion of your home, which sometimes people think is instead of a reverse mortgage. I don't think it is instead. I think it's 2 different markets. I would love to have you on, with our old friend Craig Korn, and discuss that. I'd love to bring you on with some people from the long-term care insurance world. And of course, one of my national sponsors is RE/MAX Alliance, which is the number 1 RE/MAX agency in the state of Florida, and number 5 in the country. So they know that sometimes I yell at the real estate world, for not working hard, not being as educated as they should. But I say the same thing about our world, the mortgage world. So RE/MAX isn't mad at me for when I do that. But I'd love to have you on some panel shows if you'd be good enough to come back.
Well, our mantra, everything you said is so true. There's plenty of room for all of us. And the mantra at Movement Mortgage is we exist to love and value people. We talk about that every day. And I know that's a feeling from a lot of people. And we gotta help more people, because this is not about making more money. That will happen. Just like I mentioned with Zig Ziglar, if you help enough other people, you're going to make more money. But what it all comes down to very clearly is we have to get the news out. We have to help people have a better retirement in the most vulnerable fourth quarter of life. And I appreciate everything that you're doing, Michael, to get that out there. And I'll do whatever I can to help.
All right. Well, on behalf of 62-year-old people all over America, we thank you for everything you do. Thank you, everybody. Another great 62 Who Knew. Go to our website, like, share, subscribe, tell your neighbors, tell your dog, tell everybody about us. Have a great week.